These are the Canadian tax changes for 2025. Some things are going up, some things are going down. Hey guys, it's Adrian here, the Canadian in a t-shirt. And today I'll break down the important tax changes that you need to know. This is a series I've been running for 3 years. There's a lot to cover. We have the new limits for the TFSA, RRSP FHSA. We have big changes to the CPP, Canada Pension Plan, new capital gains tax, updated tax brackets, credits, and a little extra help to buy your first home. I'm not going to cover the GST holiday. I want to focus on the things that really matter and affect us all year round, not just 2 months. Let's jump in. Starting with the good news, the TFSA. Everyone is getting an extra $7,000 worth of contribution room. That means more tax-free room to invest with. The TFSA is one of the best ways to build wealth in Canada, and everyone benefits. There's no downside, so make the most of it. Start investing right away to give your money more time to grow. We gain this extra $7,000 of room on January 1st, but don't worry, even if you don't have the money, you don't lose it. That contribution room is carried forward. And everyone in Canada gets the same room. It doesn't depend on your income, only your age. Use this table to find your total TFSA room based on your age in the year 2025. If you were born in the year 1991 or earlier, meaning you'll be at least 34 this year, you have a total of $102,000 of TFSA contribution room. That's how much money you can put into your TFSA if you're starting from scratch. Looking at the bottom, if you were born in 2007, meaning you're turning 18 this year, you will have $7,000 worth of TFSA room. For new Canadians, this is important. You do not need to be a Canadian citizen or a permanent resident. As long as you live in Canada and have a valid social insurance number, you can open a TFSA account and start investing. However, you only start building TFSA room once you actually live in Canada and are at least 18 years old. Use this table to find your TFSA room based on when you moved here. If you're 40 years old but you only moved to Canada in 2024, you don't get the full $102,000 of room. You would only have $14,000, the same as a 19-year-old. You earned $7,000 in 2024 when you moved here and another $7,000 for 2025. Watch my TFSA playlist to learn the rules and make the most of your tax-free investing. For the RRSP, we also have extra contribution room for 2025, but wealthier Canadians will benefit the most. Let me explain. The RRSP is designed to fund your retirement, and you get to reduce your tax bill, but your contribution room does depend on your income. Each year, your contribution room will grow by 18% of your earned income from the previous year. That includes your job, net business income, and rental income if you're a landlord. It does not include investment income, no dividends or capital gains. So if you have a salary of $100,000, you'll earn 18% of that, or $18,000 worth of room. But that new room is capped at an annual limit. In 2025, this limit will be increased to $32,490. That's an extra $930 compared to this year. So good news, but it only benefits the high earners. You need to be making above $180,000 to get this higher limit. For the rest of us, our new room will be the standard 18% of our income. The RRSP comes with a lot of rules, but it can be very powerful if you use it the right way. Watch my RRSP Explain videos to learn how. Now for some good news to help you buy your first home. The Home Buyers Plan is being significantly improved this year. This allows you to withdraw from your RRSP tax-free to help with a down payment. Until now, you can only withdraw $35,000, but this year it's increased to $60,000, almost double. And as a couple, you can pool your money and withdraw a total of $120,000 tax-free. Combine this with the new FHSA and you can make a real dent on that down payment. Here's the catch. Whatever you withdraw, you have to repay back into your RRSP over the next 15 years. Until now, you had to start these repayments 2 years after buying your home. This year, that grace period is extended to 5 years. With a new home and all the costs, your money's going to be tied up. But now you have 5 years of flexibility without worrying about repayments. More great news for home buyers, we have the new FHSA, the First Home Savings Account. I love this account. It combines the best benefits of both the TFSA and the RRSP. All the money you put into the FHSA is tax deductible. It lowers your tax bill, just like the RRSP, and that money is invested and eventually withdrawn tax-free like the TFSA. It's a game changer. In fact, maxing out the FHSA will be my biggest priority in 2025. Same as last year, you'll get $8,000 of new room for the year with a lifetime limit of $40,000. But listen up. You only gain that room if you actually open an account. If you're buying a home in the next 15 years, make sure you open an FHSA before December 31st, even if you don't put any money in. That unused room, 8,000 for 2024, will be carried forward. So in 2025, you'll have a total room of 16,000. If you wait until January, you miss out. You'll only have half the room. I cover a bunch of end-of-year tax tips in these videos here. And check out my FHSA Explained video for all the rules and how to open an account. I opened my FHSA with Questrade. Link down below to sign up. Now some bad news. Our CPP deductions in 2025 will increase. The Canada Pension Plan is a federal retirement plan we all pay into, except for Quebec. The CPP rates are unchanged, but the maximum limit is increasing. So for higher incomes, that means more money out of our paychecks. This year, we had a huge change. They introduced 2 levels of CPP contributions. I don't want to get bogged down in the math. I already have a whole video breaking this down. But here's the bottom line. If you make less than $68,000, no changes for you. Above $68K, you'll pay a little more this year. For the higher incomes above $81,000, you're going to pay the max amount of $4,430 in CPP. That's an extra $375 more than last year. So that's an extra $15 taken off your paycheck. Be prepared. And if you're self-employed, you have to pay double. Your half and your employer's half. No one likes paying more, but remember, this is your pension. Once you retire, you'll receive monthly income until you die. And the more money you put in, the more money you receive. That being said, you should not rely on the CPP for your retirement. That money is there to help, but it's up to you to build your own retirement fund. The best way to do that is to invest in your TFSA and RRSP, and you'll need a brokerage. I love Questrade and Wealthsimple. Links down below to sign up. But there's a new platform that I'm using called Moomoo. They have some of the lowest fees I've seen, especially for US investments. I'm not kidding. With Moomoo, I'll be saving thousands of dollars on conversion fees. I break down these savings and their great features in this video here. And use my referral link down below to get a $200 sign-up bonus when you deposit $2,000 or more. That's free money, so take it and invest it. Back to the good news. For 2025, the federal tax brackets have been expanded so that everyone will pay a little less in taxes. Here's how it works. We have tax brackets that start at the bottom and build on top of each other. So your first $57,000 of income is taxed at the lowest rate of 15%. Then your next $57K is taxed at the second bracket of 20.5%. Then the next bracket is 26%, and so on. This way, lower income Canadians pay less in taxes as a percentage than higher incomes. Now, to adjust for inflation in 2025, the tax rates are the same, but the tax brackets themselves have grown by 2.7%. That's a good thing. Now, more of your income will fall in the lower tax brackets, and so you'll pay less taxes overall for all Canadians. Specifically, the lowest tax bracket of 15% has been increased by $1,500. So now your first $57,375 will be taxed at this lowest rate. The second tax bracket of 20.5% has been increased by $3,000. So now any income above the first $57K but below $114K will be taxed at 20.5%. The third bracket has increased by $4,600, and so on and so forth. Across the board, all Canadians will see more money in the lower brackets, and so you'll have a lower tax bill for the same income. Note, these numbers are only for federal taxes. Each province also has their own provincial tax brackets. More good news, a lot of tax credits are also getting a boost this year. The most important credit is the basic personal amount, which helps all Canadians. For 2025, the basic personal amount will grow to $16,129. That's $400 more than last year. What that means is if you earn less than $16,000 a year, you won't pay a single dollar in federal taxes. This is very helpful for students and part-time workers. For everyone else, we receive a tax credit. So bottom line, we don't get taxed on the first $16,000 of our income. Now, if you have a very high income in the top 2 tax brackets, this credit will get clawed back. Don't worry, this won't affect you unless you make above $177,000. And even then, the credit never goes to zero. The minimum amount for top incomes is $14,538. Bottom line, we all benefit from this tax break, even millionaires. Now, back to bad news. This year, the capital gains tax increased. For for corporations and wealthier Canadians. Until now, whenever you sold an asset like stocks or real estate, only 50% of that profit was taxable. Now that inclusion rate has increased from 50% to 67%, but this only applies on capital gains above $250,000 in a single year. Let's be clear, this will not affect the vast majority of Canadians. Selling your home doesn't count. Your principal residence is always tax exempt. But if you have a second property, like a cottage or a rental, and you sell that for a profit above $250,000, then yes, those new tax rates will kick in. So for everyday Canadians, you probably won't be affected. But if you own a corporation, there are some big changes. Some good, some bad. Now, inside a corporation, any capital gain will face that 67% inclusion rate. Whether it's stocks, properties, regardless of the amount, investing inside a corporation just got more expensive. But there's also a bit of good news. If you're an entrepreneur, we're getting a massive bump to the lifetime capital gains exemption. If I were to sell my business, the first $1.25 million would be tax-free. That's huge. It's a 25% increase from last year. So for smaller business owners, this will outweigh the higher taxes and save you money. There's also the new Canadian Entrepreneurs Incentive. If you're eligible, take advantage of it. I have an in-depth breakdown of the capital gains tax changes in this video, both for individuals and corporations. Lots of changes this year. Some things are going up, some things are going down. So what's the bottom line? Will I have more money in my pocket? For most Canadians, probably, but not by much. We're going to pay less taxes on our income, but we'll pay more in CPP. For smaller incomes below $68,000, you'll definitely see a boost in your paycheck, since CPP stays the same, but taxes go down. If you want to see my paycheck and all these numbers line by line, check out these two videos here. I'm a good example to use, since I keep my income fixed for the past 3 years, so we get a clear comparison between taxes and CPP each year. For more tax savings, watch the rest of my Canadian tax guide, my silver colored videos. Links down below. It's important to learn so you can make the most of your money. Thanks everyone, and I'll see you guys on the next episode of The Canadian in a T-shirt. Bye guys.